For tuning into the call. Today is the weekly outlook. It's February 1st, man. It's February 1st. This year is well on the way. We already getting towards the end of the year. Not really, but you're gonna look up and it's gonna be there, right? So we gotta really take every day serious, every week serious, and act like it's time that we never get back because we never gonna get it back, right? So I like to, do these calls on Sundays just so everybody is adequately prepared. Because if you stay ready, you don't have to get ready, right? Now, one thing I'll say about last week specifically, I don't know if anything could have prepared us for what happened with gold and silver, right? I don't know if there's enough preparation in the world for um for what it is that we saw in these markets, right? Real crazy type of price action, real crazy, just everything going on with the markets. And we could speculate all the different reasons why we had this massive drop. But more so than that, I'm actually excited that it dropped. I'm actually glad that it dropped because this now gives us an opportunity to get active, right? Nothing I hate more than buying overbought markets, right? And gold has been on this massive uptrend for so long. It's like you just kind of got to get in where you can, get in where you fit in, and just buy and hope, right? But with this massive sell off, now we really got some sort of rebalancing of price taking place. There's some other fundamental things happening right now as well. Look, there's speculation that we may be getting ready to go to war with Iran. And if that does happen, expect gold to make new highs. All right. Expect gold to make new highs, cross over into the 6,000 range. If not, I could see gold dropping a little bit more, right? I can see gold dropping a little bit more. Regardless of what happens, I do have us coming down to about 4,600, give or take. We might pop a little higher, like 46.15, 46.30 in that region, right? But primarily what I'm paying attention to is this gap that we have here. All right. Market left this gap behind way back in, what was that, January 16th? I don't know why it looked like it's way sooner than that, but January 16th, market left this gap between the 16th and the 18th when the market opened back up on Sunday. Market never came back to rebalance this price action. It just kept flying up. Now, what I can see is not only just the market coming back for that area, also clearing out, the weak lows that we have here. We got an area of consolidation, all right here, where the market is stuck in this range prior to running to the upside. Now, the thing that we love about ranges are they're easy to identify as internal range liquidity, all right, meaning that there's likely money underneath these lows, all right, and the money is underneath the lows because they want to allow market time to clear these lows out. All right. All the people that were buying in this region, all right, clear out the liquidity there before continuing to the upside. All right. So I like the reaction that we got. Typically, I like to see a reaction above where I'm looking to get in. Reason why this is important, primarily, family, is because when you have a reaction, all right, above the area that you're looking to get in, that means that there is a buildup of liquidity taking place. All right. A buildup of liquidity taking place. Now, what is liquidity? I know we got a couple new people here. Welcome to the call. Definitely appreciate y'all for tuning in on this Sunday. And what one thing you got to understand about the markets, guys, is that it's driven by liquidity, and liquidity is the fuel that is necessary for the markets to move. All right. So one thing you got to realize is that trading is a zero-sum game. All right. There's a lot of people that lose, so very few people can win. They say over 90 to 95% of traders are not profitable. So what does that mean? It means wherever you get in, let me go ahead and mute everybody real quick. That means wherever you end up getting into the market, likely that position is wrong, right? When you and what you have to be good at doing is identifying where other people may want to participate, and you have to try to find a reason why they'll probably lose and then align it with your strategy, right? Now, with that being said, when we see a reaction like this, What is it that a lot of people do? A lot of people look at this. I don't know if people still trade support and resistance these days. I don't know personally, but a lot of people look at this. They used to call this a double bottom back in the day. I've been trading for a long time. Back in the old days, they used to call this a double bottom. I don't know if people still trade that or not. Y'all let me know in the chat if y'all still trade that, right? But what happens is the market will react off of a level and then it'll bounce off of that level again. All right. And what tends to happen when this does happen is you get this pattern. All right. And when the market bounces off of a particular level, there's what we call engineering liquidity. All right. That's what we call engineering liquidity. And the market is engineering liquidity because in order for them to take money from you, you have to actively participate in the markets. All right. So when you're on your trading device right here, my nice drawing, my nice demonstration, this is your trading device. All right. This is your phone, your laptop, your computer, right? Whenever you push the buy button or the sell button, the money goes from your phone in virtual, ones and zeros, digital currency, and then it goes into the market right here. All right. After that first reaction, after reaction number one. And then what'll happen is you'll get another reaction right here. This is reaction number two. But if the second reaction is not lower than the first reaction, okay, the money that is generated from the first reaction never gets liquidated. Okay. Now remember what I said just a couple minutes ago. If 90% of traders lose money in the markets, that means that most people are going to lose and get liquidated out of their position before the market makes the real move it wants to make. All right. So, for example, a lot of people probably started taking buys right here because the market's been dropping for so long. They're finally ready for the market to react. So now the market bounces, and then the market does what? It makes a higher low point right here, a higher low point, higher than this previous low. So when you have this W pattern, okay, but the second dip is higher than the first, that means that there's still money underneath that low. And there's a good chance, okay, there's a good chance that the market will run that low before it takes off. All right. Drop a one in the chat if you ever took a trade. It started going in the direction you wanted to go, and then you lost out of nowhere. And then the market took off in a direction that you really wanted it to go. Has that ever happened to y'all? You ever took a buy, market knocks you out of the buy, and then the market goes the way you wanted to go? Well, that's the exact reason that happens. All right. The reason that happens is because the buyers have not been liquidated yet. So you want to be on the right side of the money. You don't want to trade with all the rookies. You don't want to trade with all the beginners. You don't want to trade with the 90% of people. So when I see a strategy or when I see an opportunity that most people see, I don't get excited, right? Like I don't put my money on the pattern that everybody sees. I'm gonna wait for everybody to lose first, and then I'm gonna take my position, right? Because that's how you become profitable. If I do what 90% of people do, I'm gonna get the same results as the 90%. So what I would prefer we do is wait for the market to clear these lows, all right? And then we could probably get this bounce right here, right? Now, good thing is the market, had a massive sell-off, giving us much better pricing for gold buys. That's the good thing. Bad thing is, just fundamentally, politically, global economic, all that type of stuff. We may be going to war, right, with Iran. And crazy enough, I remember back October 7th, I want to say 2023, I believe. That's when the gold bullish move started. And that was when Israel bombed Gaza, right? And so all of this stuff is priced into the price action. It's crazy. I literally marked it up to a T. And from that moment, gold has been bullish nonstop, like literally for the past 2.5 years, right? So, this is pretty much what's going on, guys. You understand? It's a huge change in just the entire monetary policies, monetary infrastructure. Fiat currency is dying. We are moving towards tokenization, and we're moving towards, crypto being the thing, right? the Genius Act passed. That is for, crypto. And then the crypto infrastructure bill that's being doctored up currently, that'll be the thing that solidifies it, and that'll send gold to the moon, as it's already going. I don't think this is the bottom. Even if we go a little lower just to reset price a little bit, that's fine. Another thing that's happening is there's a lot of gold. People earned a lot of money on paper, right? On paper or in their accounts and stuff like that. But when it comes to trying to cash out that gold, there's a lot of things that need to take place, right? The gold needs to be on hand, whether it's in the bank, wherever it is. A lot of these people probably tried to cash out their gold as well. That's probably another reason for the drop. But as demand for physical gold actually increases, because people are going to try to cash out, because you don't own it till you own it. It's kind of like crypto, right? Like you don't really own it if it's on your app. You need to put it in a cold storage wallet. Like, so people that probably really want to own their gold is part of the reason why this market probably crashed. But as physical gold demand increases, we can see price continue back to the upside. All right. We're currently closing this gap right here. Um, I don't like trading right at the open of the market, I'll be honest. But if I had to not guess, but if I had to make an educated, decision, I would say the market will probably drop from clearing this gap. If you can be patient and wait, I prefer you wait just to look at this green zone as a potential buy zone. All right. Trading against the overall move, you can make money this way. Don't get me wrong, but you might want it to drop from here and it might decide to drop from here or from here. And, it's unnecessary losses being taken. I'd rather you clear these lows out first, just for extra confirmation, and then we'll get the move that we're looking for. All right. So that's pretty much my analysis on gold, guys. Again, much needed drop. But make no mistake, fiat's going down the drain. Gold, people are buying gold. Banks, institutions, everybody's buying gold right now because it's the only physical, asset that is not that's against what's the word? Anti-inflation, right? Or if that makes sense. It's another word I'm looking for. It's on the tip of my tongue. I can't really remember, but it's anti-inflation because you can't make more of it, right? When you have paper, you could just print more and more of it, and the more that's available, the least valuable it is. Is the reason why a Lamborghini is more valuable than a Toyota. You see Toyotas everywhere, but Lambos are rare. It's the same thing in the markets. The thing that's more rare is more valuable. So the fact that they can push a button and print $1 trillion, that means the paper is losing its value. But deflationary, that's the word, deflationary assets like gold, silver, Bitcoin are going to be the future. And yes, Bitcoin is tanking drastically right now. Thank God I got out of gold or Bitcoin. I transferred most of my Bitcoin to Tether some months ago, and I'm glad I did because I was losing a few $1,000s a day from that entire drop. I ended up getting out at like 102, and now the market is just continuing to dump. I'm anticipating about 65 or so. All right, around 65, we'll probably see another accumulation of some sort between 60, 65, I believe. Clear out this low, find some area of accumulation, possibly to make some new highs. Maybe in, who knows, man, this could be quarter 3 or so. These accumulation periods can definitely take some time. If you even look at this, for example, this was from, February 2024 all the way up until October before the market made a move. So, it's February 2026 right now. Don't be surprised if this thing just drags out until quarter 3 or quarter 4, right? But again, that's long-term plays, guys. Let's focus on what's going to happen this week in the markets, right? You already got my gold analysis. Let's take a quick peek at the NASDAQ, see what we got cooking up here. And then we'll go over to some currencies, all right? Okay, gotta get a currency some love. Gotta get a currency some love, even though, everybody trades gold and Nas these days. Can't forget where you come from, right? Can't forget where you come from. Let me check the guy. Bitcoin look like she's pulling a measured move down the. Yeah, I mean, yeah, if you trade measured moves, I can see that. I'm not a big measured move guy myself, but I can see that. Um, so far as NASDAQ, all right. Now, if y'all remember, I gave y'all this, when was it? Was this last week? Yeah, last week on the weekly outlook. We took this sell Friday, and you see how it just played out perfectly. Sell to buy perfectly. And honestly, I missed this buy because it happened directly at the open. And I prefer not to buy directly at the open. Now that the market has came back for seconds, all right, it came back for seconds. I'll be honest, I wouldn't be surprised to see this thing fly. Obviously, the market's already moved pretty considerably already. Um, so if I were y'all, and you're trying to get in on this buy, a lower time frame, higher low would be ideal, okay? Even if it's from here, all right, it's okay to take that jab because here's the risk. If you don't take this jab, you risk missing the entire move, okay? And the entire move should make new highs, all right? Way up here. All right, which I said right here. If price drops down to clear out internal range liquidity at 25,301, all right, if you look at this price right here, if I'm not mistaken, this is 25,301 is this black line right here. All right. And we came and we hit that perfectly. All right. Let's look for the style line. All right, so it's the bold black line. That's 25,301. All right. And then we should accumulate and continue higher into higher regions up here. Now, obviously, we did get a nice push already. The fact that the market came back is just extra, right? We could take that trade again. Because what do we see happen here? We've seen weak lows, okay? We've seen a reaction here, higher low here, right? Higher low from this low. So that's pretty much this taking place. You got this bounce, you got a bounce right here, you got a bounce right here, right? Ultimately, you got all these, the market keep making these bounces, but that initial bounce right here still has money underneath it, okay? Which is why the market had to drop one more time to clear it out, okay? What you did just here. We just cleared that money out, that liquidity. All right. So now that we cleared it out with this move here, this thing could realistically just fly to take out the money that's up here. Because if you look up here, we got weak highs now, right? Weak highs is when you make highs, but then the next high is lower than the first one. All right. So we create a high here, then we create lower highs, lower highs, lower highs. There is a lot of money up here for the taking, and this is going to act as a magnet for price. Okay, this is going to act like a magnet for price. So even though I'm not a big fan of taking trades that have already started pushing, you can see just from, if I weigh the pros and the cons, you could see the reason why this may be a valid trade setup right here. Now, let's say you take a loss, right? Because look, I'm not immune to taking losses, guys. One thing I want you to understand, the strategy is amazing, okay? But at the same time, you also have to calculate and you have to take calculated risk, okay? With that being said, let's say this trade loses. Fine. Then we take this one. Okay. So this would be my first attempt. Then that would be my second attempt. All right. Where we get in underneath this low. And we could use that as in our area of internal range liquidity. All right. This is really the ideal trade setup. This is the only, I would prefer to only take this one. Let's just put it that way. All right. But considering what's on the table and what's on the line, if I end up missing this one, I am willing to lose here just to see if I can make money there. All right. Because if I miss this trade, then I walk away with nothing. All right. But let's say I lose this first trade, but then I win this second trade. All right. And then the market does that, I make my money back. Right. Because there's something called risk to award. Right. Risk to award is what allows you to make money regardless of your win rate. Right. I can win 2 out of 10 trades and make money because my risk to award is phenomenal. All right. Any given day, I'll take a 1 to 5, 1 to 10. Like this trade right here, you see where it says risk to award is 1 to 10. That means I could have lost this trade 9 times, won the trade once, and I still would have made money. Okay. So when you have that understanding of the markets, it allows you to roll the dice every now and then. It allows you to not even gamble, right? You still taking educated guesses with logic, but it allows you to be wrong and it takes the pressure off of yourself to be perfect all of the time. All right. So with that being said, if we just take a look at the setup just from our strategy perspective, we really only been looking at liquidity this entire time. But now that we can get down to the strategy, we have a strong low here. This low is lower than this low and this low right here. All right. Y'all see that? So look at what the market did. The market created these two equal lows like this. And what did I just tell y'all? This is the prime example of a weak low. All right. There's money underneath this low from the people that are buying prematurely. Remember, every time somebody presses buy, this bag of money gets bigger. Every time the rookie traders, the people that don't make money, the people that just make deposits and no withdrawals, every time they see a pattern like this, they get in because they're afraid they're missing out. They see the market pump up. Oh shit, I don't want to miss out. The market pumps up. I don't want to miss out. So they just start taking buys. They start taking buys, taking buys. And this virtual digital bag of money gets bigger and bigger. It's called liquidity. Now we know that the market makers, in order for them to make millions and billions of dollars, they need to snatch millions and billions of dollars from other people. Okay. That's why trading is a zero sum game, right? It needs to be an equal amount of losers as there are winners and vice versa, right? But the winners is in the losers and winners are not in the amount of people, it's in the amount of money. Okay. So the fact that 90% of traders lose, that means the 10% of traders that are winning are making a whole lot of money. All right. Because there's an equal amount of liquidity on both sides. So when you understand that, you realize that most people are going to lose here so the few people can win here. All right. Now, that is likely going to be the low that sends the market higher. Now, the other thing on top of that, if we just go down to the 1 minute, the thing that makes this even more attractive is what? Somebody in Trade Genius tell me, what is it about this low that makes it even more attractive?
It's a strong low inside of a strong low.
Absolutely. It's a strong low inside of a strong low. All right, so what do I mean by that? Again, real quick, then we'll move on to the next pair. All right, so we make the double bottom that built liquidity, and then we take it out, right? And then the market is pushing back up. That's what's happening right here, all right? But if we look closely right here, uh, let's do this. This is what happened right there, right? I'm trying to make it visual for y'all, you know what I mean? Just, trying to make it visual for y'all, man. So what happened inside of that strong low is the market actually made another strong low like that. So you got a fractal strong low inside of a strong low. Y'all see that? Look at this right here. Y'all see that? Strong low inside of a strong low. So that's like a double confirmation. That's like, that just lets you know, like, oh yeah, like we green, right? So now that I see that, and then when we look at where this happened, all right, not let's not forget where we are because it's not always about what happens. It's also about where is it happening. This happened underneath the last week's low where the market opened up. All right. And we're underneath internal range liquidity. And we're inside of this fair value gap, this green shaded area. So when you get these signatures in these very specific areas, that is the thing that we're looking for to take trades. All right. It's not always about what happens, it's also about where it happens. All right. So again, on the 1 minute, we see it. Beautiful, strong low. All right. Market pushes up. You might be able to call that a hezzy. It's nothing over here to the left. It's a gap. So, what I call it a hezzy, I mean, maybe, but probably not just because there's nothing to really see over here, right? Let's just wait for the market to, like I said, either retrace to this level. Okay. You do have a fair value gap here as well. So we can risk some money there. You know what I mean? But if this low does not hold, we for sure take it out of this zone here. All right. Does that make sense to everybody? I'm just trying to go through my process, show you guys how we take these trades. All right. Since the crash, let me check the chat real quick. Since we had a crash, do you think gold shooting back up? Hold on, sorry. Since we had a crash, do you think gold shooting back up crazy after the correction? I mean, yeah, it's more likely to shoot up now than it was previous. I mean, that correction was needed, honestly. Correction was needed. But Nas is pumping. But whether it happens tonight, whether it happens tomorrow morning, it'll probably get back down to these zones, right? So just mark them off. Set alerts if you got to. You can go on TradingView and you can like set alerts at certain areas. That's what I would do if I was y'all. But this doesn't have to happen tonight. It doesn't have to happen in the next couple hours. For all we know, market could do this. It could hesitate, cross up all the way up here, and then come down. It might happen for New York session tomorrow. We don't really know. All right. But that's what I see happening there. All right. Let's take a look at Euro USD, GU, and then we'll run through all of our currency pairs real quick just to see what we got. All right. Um, Looking at this, matter of fact, let me start with the DXY. All right. Start with the DXY. Getting a little short-term relief, but overall, if we understand what's going on, we just cleared out, this low over here to the left. So if anything, I think we're really just creating a retracement for the market to continue. The dollar is going to keep dying, guys. I don't really see this slowing down. All right. At least not to go bullish long term or, even on like the 4 hour chart or the hour chart, I don't really see long term bullishness. I see this little gap right here. All right. I'm not a huge fan of gaps, but it is something that we can mark off. And then obviously this huge imbalance up here. So, the market could, just shoot up to this gap and drop. It could slightly overshoot the gap and then drop. Overall, just, respecting this zone in general. However it wants to play, that's fine because, we're gonna go to the lower time frame and wait for the triggers anyway. We want to see that consolidation, that consolidation, manipulation, and then we want to see that drop. So, we'll wait for that. And whether it happens here or a little higher up here, I do see lower prices for this. This low doesn't look very attractive to me. I could see this low really just going down here, all right, and making a new low. All right. Hold on, yo. Hey, that ain't working. Go watch TV. I'll be back. Hold on, y'all. Hold on, fam. All right, so whether we do it here or here, like I said, I do see the DXY continuing to die. All right. So and look, we just at 96, 95, 96 right now. There's still a long way for this thing to drop. Because what y'all gotta realize is when it comes to understanding, just what has made the dollar so strong for decades, it's simply been um, just us being the world's reserve currency. And it's like, we go into countries, we tell them they have to trade with the US dollars or else, we use military force and whatnot. And honestly, that playbook is starting to get old. It's starting to die. A lot of people are moving off of the dollar and the fact that we're no longer backed by gold ever since, was it the 60s or something like that, whenever that happened. The only thing that's been holding up the US economy is reputation, right? And, forcing everybody to use our dollars in trade. And because 90% of all trade around the world is used in US dollars. So the fact that countries have to hold it and countries have to, participate using the dollar, keeping it in circulation, that's what's kept it strong all these years. When you just understand what's really going on, not only just the fact that we are moving more towards tokenization, also other countries, forming their alliances, whether it's BRICS, moving off of the dollar and stuff like that. That is partially what's drawing the dollar down, as well as, during 2020, like 20 to 25% of all the money ever printed in history was printed during like COVID. So that's another thing that has overstimulated the economy from the standpoint of there's too much money in circulation and now it's just driving down the value. Like I said, the more of something there is, the less valuable it becomes, right? So just understanding those little, fundamental key points is really what's got us going a lot lower. And I could see 70, honestly, within the next, I say, uh, let's draw it out real quick. 600 days. This would be the next 300 days or so. Um, I'd say sometime next year would probably be under 70. So, but I do anticipate just a consistent downtrend for the entire year, right? Next target should be about 88. Right now, we're at 97. All right. So, with that being said, EU and GU should keep going up. Now I'm just gonna find a reason to keep buying Euro USD. All right. Go ahead and clean up my chart. I know it's a lot going on. All right. So even just looking at this chart right now, I do see the, slight pullback happening on the DXY. Where could we be heading? Little gap right here. Got some, internal structure resting right here. So I'd say, we push down, knock this area out, and then we watch for signs of reaccumulation, right? We watch for signs of reaccumulation down in this region right here, all right? So if the market tends to, let's say the market comes down here and then it starts to, range a little bit, that would be a good indication, right? It starts to range and then manipulate down. We could probably catch the tip down there, all right? So that's what I'd be looking for down there, all right? One sec. If you know, you know, right? Anyway, but more power to him. If we look closely right here, actually, I didn't even peep this at first. Look at that. See that sell right there? That sell down before the buy up? That's a very attractive candle in my opinion, because this is where there's could be some demand. All right. So I'm gonna just mark that off. All right. We're gonna mark that off. And this right here could very well be where the market gives us a reaction, right? Now, this isn't a typical area where I would take a trade from, but just understanding the conditions that the DXY is in right now. And if we look down, it's not really many other places that we could see the market reacting from, all right? So, understanding that, unless we just go super bearish for the next couple of weeks, I just don't see that happening, right? The dollar is extremely weak right now. There's no signs of strength. Everybody's selling their treasuries and everything, right? Like it's getting bad. So I'm gonna look for a reason to get into the market up here rather than, anticipating long-term bearishness. All right. Same thing with GBP USD. All right. If you look closely, there's a little area of demand right here on the 4 hour. There's a little mess right here that will probably come and clear out. Okay. So let's come and clear that low out, fill in that tiny gap right there. All right. From there, it's not much going on right here. Truth be told, I'd have to watch it, right? I feel a little more confident in Euro USD than I do specifically on GU. We'd have to watch this one closely. It's not a lot going on in this area. We got a little gap here. So I just play it. I try to find some accumulation taking place. For y'all not aware what accumulation is, it's like a wick off schematic, right? And I don't get all into the different labels of wick off schematics, but I will show y'all this just so you can kind of, you can take a screenshot if you want. And let's see. I should have something in my notes real quick. Accumulation. Hmm, that's interesting. Hold on, I'll send it to the chat. I know I got it on my phone. Thought I had it on my computer. I probably do. I just saved it or something else. But I'll send this to y'all. You can save it and use it if you guys want. Schematics. All right. Just a second. I'm almost done. So again, I do not go through the process of like labeling all of this just to save time. Like I'm good at visualizing it, rather quickly. just to save myself some time. So essentially, what you want to see is something like this, right? You want to see that first reaction, second reaction, then you want to see that sweep of liquidity that'll send the market higher. These formulate in different ways too, right? That not like all of them are not the exact same. Primarily, what I'm looking for is the market to range and react, right? Range and react, and then we look at that second or third, sweep of the lows, right? So until, long story short, and we'll take a look at the reaccumulations real quick. This is probably more of what's happening on, EU more so than the other ones because it'll be a continuation and not a reversal. But I want to see the market range, then take out the lows of this consolidation before it pushes back up. Same here, maybe right here, make a low, take it out, and then continue to the upside. So that's the type of stuff that I would prefer to see. All right. Before just getting in to a trade, especially if it's in the middle of no man's land like this, right? So we just come down to the 15 minute. You see, we ain't really started the range yet. We really just dropping, right? So what we really want to see is this first bounce. That could be that first reaction. Now, if we come down, do something like this, and then we do that, that'll be like that spring, and then that could send us higher, right? Overall, you just want to see the market gather its thoughts for a while before you just hop in. You don't want to get FOMO and hop in too soon. So essentially, that's what I mean when I say accumulation, right? But if you want to study that deeper, you can do that on your own time. I don't really get too deep into um, wick off, but I do understand it in terms of helping me have my patience. All right. So we're gonna do a quick run of these currency pairs and then we'll call it a day. All right. Is there anything specific y'all like me to take a look at? Anything specific you'd like me to take a look at currency pair wise? Y'all can let me know. I know everybody trades Nas and gold these days, but if there's anything that I can go over specifically for y'all, let me know and I'll do it. All right. So this one is pretty simple, I would say. All right. Pretty simple. We got weak lows. All right. Why are these lows weak? Because they got established and they started making higher lows. All right. Weak lows here. We take the weak lows out right here. And now, as we're crossing back over to the upside, we hesitate off of supply and then we cross over. All right. So that is the Hezi crossover. Okay. That's the Hezi crossover. All right. So, boom, we got our textbook Hezi crossover. All right. And this will be a free signal for y'all, too. I'll get this to y'all. Everybody that's still on, you're still pretty deep on. I know some people had to hop off. It's all good. But for y'all that's still here, you'll benefit from this. All right. So, my strategy entails this, right? Strong low Hezi crossover, get in underneath the Hezi, right? So that's internal range liquidity. Why do we call it that? It's because it's the money resting internal of a trading range, right? This is my low of the range, this is my high of the range. This is the liquidity that's internal of the range, which is why it's called internal range liquidity. So what I'm looking for is for the market to come and clear these lows is going to retrace and is gathering fuel, right? So this is money that is going to collect. This is money and fuel and energy that is going to collect. This is money, fuel, and energy that is going to collect. And as it collects, it's going to have the power to make a higher low and to continue higher. We'll clear out these highs here, bare minimum. Will likely go much higher, all right? Clear out these highs. That'll be second take profit. Third take profit will be those highs up there. All right. So that's that. All right. Now go ahead and clean this up for y'all. Clean that up, clean that up. As you can see, I do a lot of instructing, a lot of visual work. So whenever it's time to do a trading call, I gotta erase a whole bunch. But that'll be TP1. I say TP2 will be solid right there. TP3 should be about up here, right? Get in underneath internal range liquidity. Stop losses beneath the low. 35 pips is kind of a lot. So if you want to take it like a signal, you take it right at internal range liquidity. The thing that helps me with my risk to reward, make no mistake, this is a 6.5 risk to reward. So this is still really good. This is still better than most, but I do like to catch like 1 to 10s or better. If you guys want to catch like a 1 to 10, just take it and time it, right? Like this could be a pending order where you just get in right at the line. But if you're timing it perfectly on the 1 minute chart, you can get in and then you can set your stop loss right beneath the candle you got in. That's something that I do a lot when I'm trading live. And it's what allows me to get, 1 to 10s. A couple weeks ago, we actually had a 1 to 35 take place. That was a beautiful trade. That's like you risking $100 and making 3,500. So, that's the type of trades you can get when you understand just being precise, right? And some people may think it's unnecessary to do all that extra work, but if you telling me I could risk the same amount of money and make 10 times more, then that's what I'm gonna do. All right. So that would be the first signal right there. GBP CAD looks good, looks solid. Um, GU, we already went over that one earlier. I want to see a little more because there's not a lot of price action to the left to go off of. All right, GBP AUD. We'll take a quick peek at it. Then I'll go over my euros, NZDs, and then we'll get up out of here. All right. So bear with me, y'all. We only got like another 10 minutes or so. All right, GA, I don't like it. Reason being is because the lows are not strong, the highs are not strong. It's like both sides just kind of look like a mess. I need to wait for this high to clear or wait for these lows to clear before I get anything. All right. So when I'm clicking through the pairs real quick, that's what I'm looking for. All right. All right, this low has the potential to be strong. We had a little area consolidation right here that we cleared out. Market hesitated, crossed over to the upside. We had internal liquidity right here that we took out right there. And now we could definitely probably target these highs right here. All right. Now, even still, the market did start pushing up already. So if you wanted to participate in something like this, you probably want to wait for the market to pull down and then potentially continue up towards the liquidity resting above these highs. All right. So that's GBP CHF. GN, don't really see nothing there. I did mark this up like this when the market was here, but I did not adjust it. The longer this takes, the less likely it is to take place, right? So that's the reason I didn't lose on this trade. I didn't take this trade. I'm watching it candle by candle as it, formulates and takes place. GJ, GJ. I don't trade this pair that often, but I do know that they're starting to buy more yen, right? Bank of Japan is selling US dollars and buying yen back, and the Fed is actually helping them do it. With that being said, I do see the potential for yen to gain strength. All right, you do see this little hitch in the market right there that could be used as a hezi off of demand right here. So we do have a strong high, hezi crossover. The lows are weak because you realize the lows are not taking liquidity on themselves. The lows are making higher lows. So when you see that, that means the lows are likely weak. All right. So when we push into this area of imbalance right here, I'm going to be looking for lower time frame because we're still on 1 hour. I'm going to be looking for a lower time frame, distribution where we, just consolidate, manipulate, and then take sales to the downside. All right. You come here real quick, move fast. Same thing essentially taking place for Euro JPY. Create equal highs, clear them out. All right, we have weak lows. That's an easy sign to get your directional bias as well, guys. If you struggle with understanding what direction the market's going, look at which side is taking highs versus which side is creating lows. So you got to look for strong highs, strong lows, weak highs, and weak lows. So here we got a strong high. Here we got weak lows. That means the market will likely end up down here at some point. You just need to find the entry. That's it. So now to find the entry, you look at these little areas where you got imbalances and stuff like that. I would say the market will probably do that right there. And then we'll be able to go short on Euro JPY this week, all right, with the yen gaining strength. All right. Euro NZD, don't really see nothing there. Euro AUD, I don't see nothing there either. Euro USD, we already went over that. Euro Chef, let's see what we got. Euro Chef. Uh, well, I see something actually. These lows are pretty suspect. Hesitation off of demand creates internal liquidity here. Strong high formed here. It's not the strongest high, but it is a strong high per our rules. Another hezi takes place here. Strong hezi. It's a hesitation that creates a strong high. Market creeps over to the downside. Um, I could see us clearing this high and pushing it a bit lower. All right. So watch that. Euro CAD. It doesn't look as good as GCAD. Just stick with GCAD. Euro GBP, I never trade that anyway. NZD CHF. Y'all see we missed that one by 1 pip last week. That one hurt, man, because I was about to go all in on that. That was only like a 6 pip stop loss. I really wanted to throw the whole bag at that trade because the risk was going to be so small. But, missed that one by a pip, unfortunately. Now I can see the market. I don't really see a clear setup right now, to be honest. Well, you can make the argument. We got a strong high here. Hezi. I don't want to move too fast. I might overlook something. There we go. You got a hezi crossover right there. See where it's happening. Happening inside of this supply zone. But these highs are not that strong, right? So I think this may be a short-lived move. All right. All right. We'll probably come clear these lows out because these lows are not strong. But right after that, we may return bullish because these highs are not strong. All right. So some of these moves will cause a real swing, and some of them will just cause a reaction that's temporary, right? We got equal lows or weak lows down here. So, that means that we'll probably target that, but eventually we'll probably return back to the upside since that supply zone high is not very strong, right? But overall, that's pretty solid to me. NZD, JPY, let's just focus on Euro and GJ. I don't really see much there, but Trade Genius, I'll be launching these setups out at y'all. Um, Other chats, whatever you got here on the call, you can capitalize on, obviously. I'll post a recording as well, to my YouTube. So be on the lookout for that. All right. Now, I do just want to, quickly ask if anybody has questions, comments, or concerns. That's pretty much everything for the call today. As you guys see, gold is dropping as anticipated. We talked about this about an hour ago. Don't get suckered into that early buy. All right. Okay. Trade if you don't want me to be great. All good. Questions, comments, or concerns, y'all? I don't know why trading view bugging. Feel like I can do this a couple times a week. Questions, comments, or concerns, family? Did everybody learn something? Is this call pretty valuable, or was it ass? You can tell me the truth. All right. Chandrea say she got some value. As long as one person got some value, I say I did my job, huh? What y'all think, man? Solid call. Look at what's happening. Look at what's happening. That's our gold right there. It's the gold right there. It's the gold. It's the gold. It's probably gonna jump, y'all. I'll be honest. Gold is very volatile though, so you gotta make sure you got the bankroll for gold. This ain't the old gold. This is a 600 pip candle. Just be mindful of that. You know what I mean? So this ain't the old gold that we used to trade. Gold is crazy volatile right now. So if you don't get in at the right spot, you can and will blow your account. I do think it'll react from here. Just make sure you got the bread to trade, right? If you can't take a loss, just sit this one out, trade these slower currency pairs. But overall, I do believe that we will get a bounce from this area. All right. If you want to wait for this candle to close, so be it. You want to wait for an engulfing, I understand. Me, I prefer to take trades when it looks the scariest because that's how you catch a wick entry, right? There's no way for you to catch a wick entry if you try to take it after you see the wick. If you want to catch a wick entry, you have to take the trade when it looks like this. You have to get in, get in, get in. And then hopefully by the time the candle closes, it looks like this, all right? And then your entries are down here, right? So as scary as it looks to take the trade right now, that'd probably be the best time to take it. By the time it looks safe, you're already too late. Okay. Not to say you can't make money that way, but if you want my type of entries, you have to take it when it's the scariest. With that being said, again, it's still early in the day, but I do think for what it's worth, um, I do think it'll react from this level. All right, if you got the bread to trade it, take a jab, give yourself a little breathing room. How much breathing room? I don't really know, to truth be told. Like gold is very volatile right now, y'all. Like this right here is 500 pips. So just make sure you do your math accordingly. You know what I'm saying? Like you don't want to be in this and give yourself a stop loss like this and it's 1,000 pips and you blow your account. So I like to play reactions, right? I like to time the reaction, keep my stop loss as tight as I can. And if I'm wrong, I'm wrong. You know what I'm saying? I'll just get in again if I need to. But I'm not about to take no stop loss with 1,000 pip or 1,500 pip stop loss. You take it, like I said, on the 1 minute. That's how we enter. I explained this earlier. Put your stop loss right underneath the candle that you entered. So here, my stop loss is already right here. All right. And if the market comes back, then cool, I'll get in again. But I'm not gonna risk my whole account. You know what I'm saying? Putting a big old stop loss like that. So like I said, I think gold will go, I think it'll move from here. If you guys, like I said, if you want to take that attempt, feel free to. Other than that, I'm gonna call it a day, y'all. Enjoy the rest of my evening. Get ready for a phenomenal week in the markets. If you guys got some value on this call, do me a favor, drop some dollar signs in the chat. Let me know if we doing some good things here, right? And if you're not familiar with me and you kind of want any more, advice or anything like that, feel free to give me a follow here, Wallstreet_Ray. All right. This is where you can find me on Instagram. Give me a DM, whatever, follow. Let me know you was on the call. We can connect, set up a strategy to make sure you profitable this year. All right. It's February. Don't play with this thing. You're gonna blink and it's gonna be August, October, whatever. So, let's make the most out of this year. Let's turn up. Let's get rich. See y'all at the top from the bottom. From the bottom, it's way too crowded. All right. Much love. Peace. I'll holler at y'all.